We're in conversation with C. Vijayakumar, the CEO of HCLTech. Thank you very much, CVK, for joining us here on the sidelines of the World Economic Forum at Davos. Take us through, what clients have been telling you about demand and budgets for this year. What's the mood that you're picking up from people you've met from all over the world here at Davos?
Yeah, good morning, Chandra. So, of course, we've spent 2 days. We've had a number of meetings. I see a sense of optimism on a number of areas, especially how to kind of really leverage technology. This year, Davos seems to be filled with technology conversations than any other year that I've seen, and especially everything around AI. I think there is optimism on what technology can do, but there is also a lot of uncertainties on how to really go about it and the associated risks with some of the adoption of some of the technologies. So I think that's kind of driving a little bit of caution, and it's also on the backdrop of some of the broader macro things. So there is cautious optimistic.
So in terms of the uncertainty itself, what is driving it? Is it growth, or is it, geopolitics? Is it elections? What's driving this?
Yeah, I think multiple factors, but the way they translate to clients is they need to get more efficient. They need to reduce costs. They need to bring in hyper automation. All of that, all the external macro finally reflects in customers wanting to at least maintain their profitability and grow the business. And I think we play a very important role in that whole journey, both in growth as well as really optimizing for the right P&Ls.
Right. If I look at your recent results, Ivika, you have actually come off better than, some of your peers. While some of them reported contraction in revenues, you've been better placed. So take us through that. What is working for you? And, how do you expect the rest of the year to pan out? What's giving you the confidence?
Chandra, we are one of the most diversified tech services player, right? We have the entire portfolio of IT services with very strong capabilities in digital, of course, digital foundation, applications, SaaS, all of that. And of course, we have a very strong engineering services, which is one of the largest engineering services revenue stream in the industry, over $2 billion. And this is a very well diversified portfolio, even in engineering services. And on top of that, we have a very compelling software product business. We have some of the best products in the world, whether it is marketing automation or e-commerce or even endpoint security, application security. We have the best products, and these products really work. And they're deployed in some of the largest customers in the world. If you take the G1000, at least 800 of these customers use our products. And of course, this is a very compelling portfolio, and this has done extremely well in the last quarter. And of course, we also executed some of the mega deals very well. So it's the diversified portfolio, very strong execution, and incredible leadership talent that we have, very stable leadership. I think all of this has contributed to our performance this year.
Right. One other trend, CVK, is the headcount addition. While many other companies again reported decline, you actually managed to add people. Again, is that a trend that we can expect to continue? Take us through your hiring plans for next fiscal as well.
Yeah, I think our portfolio is about 88% services and 12% software. The 88% of the services business has some linearity with the people addition and the revenue growth. So with the good growth that we've had, 5 to 5.5% that we are forecasting, we needed to add more people. So while in the first half we declined, in the second half we started hiring more. Last quarter we hired 3,000 plus people, which includes 3,800 freshers. So I think it's really correlated to the growth.
This is a factor of the demand that you're forecasting.
That's right. That's
right. Is it too early to say that AI or automation is impacting headcount? Is this just a factor of demand and forecasting?
See, I think there are two things, right? First is there is all the customers, there are three pieces of work. One is all the customer service, call centers, all those type of work. We don't do any of that. We do very, very little. Wherever we do, we are mostly consulting for the clients to bring the right level of technology and optimization. So I think there we don't have headcount, but somebody has a lot of customer services work, the headcount will definitely reduce. The second aspect is software development. Software development, we believe one can get anywhere between 10 to 30% more efficient using Copilot and all of that. But that journey is not something which is immediate. It's going to gradually kind of over the next 3 years, we think that level of productivity is possible in a pure play software development kind of environment. And the third is really the operations, which is managed services, application support, infrastructure support. Here, there is already a very high level of automation driven by machine learning and all the hyper automation solutions. There, the incremental benefit that you can get through Gen AI is marginal, right? And maybe another 10-15%. So effectively, I think I don't see this to be reducing headcount. There's going to be a lot more surround work around Gen AI and all of that. I think that will more than offset. Next set of discretionary spend is going to be largely driven by all the surround areas, which really makes AI much more productive and useful for every enterprise.
Which actually brings me to my next question. In terms of discretionary spend, CVK, are we seeing that coming back?
We didn't see a difference between the September quarter and December quarter. Things have been soft, but we hope it will come back in the next couple of quarters.
Right. Anything that is giving you that hope?
I think there is optimism for that to really translate to something real on the ground. I think there's going to be a delay. So it's really a wait and watch.
Right. When it comes to margins, your operating margins, I think, came in at 19.8%, which was actually above your guided range of 18 to 19%. So again, is that the new normal? Was it a one quarter thing? And what other levers can you use?
I think our guidance is 18 to 19, and that's for the full year. Usually in the December quarter, we'll always do better than our guided range because we have a software business which peaks and that directly flows into the bottom line. So I think it will normalize in the next quarter.
Right. How is FY25 looking for you? Do you expect it to be a better year than FY24? Because you said there's a sense of optimism, things are sort of coming back. What is your sense of the next year?
Yeah. So I think it's too early to really kind of put something more definitively on FY25. But given where we are, we hope that we will do better than FY24.
Will you see you breaking out AI, as a line item when it comes to revenues? Because right now what we are seeing is POCs, proof of concepts, projects. I know you also have some going. But when will we see this, sort of being broken out as a line item?
I'm not sure if we need to break out because a lot of the volume of the work is going to come in data, cloud migration, or private AI stack setup, security, all of that, which are already there in our different service lines. So I'm not sure if we will really break it out.
No, for it to sort of gather momentum.
That's more of an internal metric. I don't think we're going to share it externally because it's kind of embedded in many service lines. It's not just one. Exactly. That's right. That's right.
On that note, thank you very much for joining us. Thank you. Wait, we need... Yeah. Your idea of responsible AI.
Yeah, we've always been committed to apply technology with a human element in mind always. And AI is not going to be any different. Really bring the human element before you really focus on leveraging the technology.
Right. Thank you so much.